So join us now, Steve Schwarzman, founder, CEO, and chairman of Blackstone Group, who I would say was one of the more prominent individuals in the front row of the signing of the China deal. I noticed that you were there, and you were smiling, and
got a nice shout out too from the
and you have a. I don't know if it's a non-consensus view, because I don't know where we should look for consensus views. If you look for, the media or people that don't want Trump to succeed, it's a nothing burger. I've seen the word nothing burger again and again about the China deal. You have a different take that it actually is a transformative deal in a number of ways. Could you explain?
Well, I think it's an important deal. Since 1949, when the People's Republic was established in China, the U.S. hasn't done a bilateral deal. And so I think it's really important that that's occurred. There's a lot of interesting things in the agreement, whether it's on intellectual property or financial institutions, and also compliance and resolution of problems. And I think that China looks at this as a very important thing because we were basically escalating to a very bad place between the two countries. These two countries together, depending upon how you do your numbers, comprise 35 to 40% of the entire world's economy. There are over 200 countries. And so when these two don't have it right, it's a big deal.
But even if there's not a phase two, and that's what we heard, is that, okay, we got a few things done in phase one. We got some ag buys. And many people said, just getting back to where we were a couple of years ago on what China used to buy. And if we don't get a phase two, we really haven't accomplished anything. But then when we look more deeply into it, there is IP things in there. There are ways of, if there's non-compliance, the tariffs go back up. When people looked at the fine print, it seems like, the notion that only in a phase two do we really accomplish anything, that's not the case.
Well, I agree with you on that, Joe. But I also think that it's in China's interest as well as the U.S. interest to do a phase two deal. And, they think it's a good idea and important. Most of the tariffs were not rolled back in this phase one. Right. So there's a lot of incentive, if you will, to get to phase two. And they're quite serious about that in China.
So we're going to be talking to Ray Dalio in just a little bit. And he still talks, though, about the idea that the relationship has moved from cooperation to either competition or something much worse, confrontation. And so the question is this just a pause button on that? Or do you really think this is a demonstrable de-escalation that's fundamentally rewritten the rules of the relationship and that we're moving back towards cooperation again?
Well, I don't think it's a fundamental rewriting of the rules. This is a start to rewrite. There are other parts of the relationship that are much more fraught, if you will, basically in technology. Yeah. And that's an area that crosses over into national security, right, and some other things. And so that's, the area of real friction. I think over time, in the trade area, it's in the interests of both countries to be in a more normalized position. And so I think the escalation made it clear to everyone this could be pretty unattractive, not just for the two countries. It's been slowing down or contributing to slow down to the global growth of the world. And that's not good either.
Steve, I was going to ask you about that because what you focused in on, I think, is one of the big key issues. Huawei, ZTE, some of the security issues that have been raised and concerns about that. I think that's a huge sticking point that continues to have big problems. We spoke with Stephen Mnuchin last week. He said that that's on a separate track. That's not going to be part of the trade negotiations. Ajit Pai from the FCC has told me that he is going forward with looking at them as a security risk. If that's the case, what kind of potential fallout does that risk? What kind of backfire could that mean for our American companies that sell technology there? And what does that mean even for other players in the region who don't want to be told you've got to choose between the United States and China, pick sides?
Well, the whole technology area with the start of China 2025, where, at least the translation of the document talked about China wanting to dominate the world with all of the modern computer science-based technologies, really triggered a wake-up call for the United States and other countries. And so it's normal for China to want to develop by itself. It's normal for the U.S. That sort of has had the lead position in technology over my lifetime, to look at that with, some trepidation. And these two countries are each moving forward.
To the point that you've invested money at MIT to make sure that the United States stays on top of artificial intelligence.
I'm American.
Yeah.
But you also...
I think we should, maintain an edge, but make no mistake, the Chinese are very capable now and are developing their own ecosphere to move forward ultimately in a more self-sufficient basis.
Steve, you've had a close relationship, really, I would say, with China and Blackstone, and you Schwarzman scholars, and you've dealt with the CCP in a lot of different ways, and that's become more strained in the last couple of years, given the focus on the Uyghurs and human rights and Hong Kong and all these things again, to the point where even a speaker that you had at, for one of the events for the Schwarzman, for the scholars, it came into all kinds of controversy. We've all benefited from our relationship with China. Are you looking at it, given recent events, and wondering how close you want to be to the CCP with some of their
well, actually not. The purpose of the program
is to try to open things up,
facilitate, sort of a dialogue.
It seems a lot more.
So as to our program, Joe, we haven't been affected, and we have a special status, in China, and China wants that connection. With the outside world.
Do you think the connection, though, it's interesting because I've praised your program and I love your program in so many ways, but there now is a huge debate in the academic world here in the United States about whether we should have Chinese students, whether they're effectively stealing IP, whether the American students are going to be allowed to be in some of these Chinese institutions. How do you think that should work?
Well, I don't know that anybody has the answer to that one. That China going to the U.S., issues on research, and knowledge transfer. There are about 370,000 Chinese students that come to the United States a year.
But do you think that the biggest academic and most successful academic, prestigious academic institutions in the United States should shut that down?
Well, it's interesting that
some of them are talking about it.
Yes, but they want to keep it open.
Right.
They make a lot of money.
Because they also have some terrific students that come from China, and they look at knowledge differently than we do in the commercial area. Academics view the production of knowledge as a global commodity, building blocks for further developments of knowledge. And so their attitudes are much different than a company and much different than a country, actually.
But it almost reminds me of dealing with MBS at this point. I mean, organ harvesting, we had Kyle Bass on. You should hear the way he talks about the CCP, the Chinese Communist Party, and it's come into focus. And you've done a lot of business over the years with China. Is that going to continue, given that there's so much pressure for reform in a lot of areas where there hasn't been much progress?
Yeah, well, we're not a one-person reform bureau. These are giant forces at work. There's a rebalancing of what's going on in the world. I mean, 40 years ago, China's GDP per capita was $300. Mm-hmm. You can't get much poorer than that. Right. Now it's $10,000. Their GDP is somewhere around 14, 15 billion. Ours is 22. They're the second biggest country in the world. There's almost no one in third place. And so when you have these types of geopolitical changes, there are other things that go with it. I think in the future, there's going to be some type of spheres of influence and sort of a coexistence that's have to be done. There are a lot of positive things that these two countries, if they choose to act together, can do for the world.
Can we pivot to a moment, your take on investing, where we are right now? Business. One of the questions I wanted to ask you specifically, and I'm doing a panel with David Solomon from Goldman Sachs in just a little bit about unicorn valuations, but the private market that you live in.
Yes.
There's a major question right now about whether all of these valuations for all these companies, not just technology companies, are actually inflated relative to where the public market is. What do you think?
Well, I think all markets have gone up pretty dramatically, over the last few years. I guess the S&P is somewhere around 19 times, and if you pay a premium to that, that's pretty high. It's partly justified by the prospect of continued growth, partly justified, by the fact that interest rates are so low.
But do you think that most of these private funds are marked up too high right now? Or do you think that when in fact people exit, they'll exit on par with what the marks look like?
I don't think the funds, Andrew, are marked up too high.
Okay.
Because you don't mark them up to exit, right? You have a cash flow model, and so those marks don't change dramatically. What changes is when you exit. And when you exit now, you're getting higher prices than you expect because everything is up. The more interesting issue is the issue of purchasing things now, because they're getting pretty expensive, and to buy something, you have to see something reasonably remarkable in terms of your ability to improve the operations of a company.
Does that mean you're stepping back and not making purchases like you had been a few years ago?
Well, I wouldn't say stepping back. This is like a hockey game where you used to have 35 shots on goal of things you could buy. Now it's like 5. So you have much fewer things that are worth your time to analyze. That doesn't mean that those things won't happen, but your opportunity set is significantly reduced.
Is there more competition for those items too, just because of the liquidity around the globe right now?
There's always competition. I don't know that there's more. We're in the large end of the market. There have always been 7 to 10 competitors. The names change sometimes, but that hasn't dramatically changed.
As a billionaire, would you like to comment on any of Elizabeth Warren or Bernie Sanders' programs or prospects during the election? Just get on the record so we can get another fight started.
Well, Joe, it's always good to be here on a low-key type of topic. But this election is really pretty remarkable in terms of the differences on the Democratic side.
Let me make it complicated for you. If it was President Trump and your friend Michael Bloomberg.
Trump, yeah.
Michael Bloomberg
Who would you vote
and your
for?
friend President Trump. Both are friends.
Who'd you vote for?
Yeah,
Trump
well,
versus Bloomberg.
I'm a Republican, and
Bloomberg used to be one.
Well, he's flexible.
So is the president.
That's true too, and I think the president's done a really good job with the economy. I think Mike is a really capable person and a longtime friend, and I think it's fascinating what's going on now with him showing up, with huge amounts of money to play the game out on Super Tuesday in March to see where he can get. There's all kinds of views of how successful he could be.
Yeah.
Would you like to see him succeed, just to mean that you've got two capitalists running against each other?
Well, you have, I don't think there's a lot of love lost on the Democratic side with the other candidates who've been out there for a year with Mike, who, has clearly got more operational experience running in New York, creating a great company, and he's a very capable person. But the issue of him, showing up with all of these ads and so forth, I think, creates some dissonance with the other candidates and also with the media. So on the other hand, we'll see what happens. I anticipate that if he does really well on Super Tuesday, game goes on. If he does not do well, I would be surprised if he continues.
So, Andrew, what was the answer?
Quest.
Bloomberg or Trump? Could you glean it?
I divined Trump still. My question, but this is my final question for you, though, is, and we're looking at a live shot right now, and the president's going to be speaking in a moment. Do you have any early intel on what he's going to be saying?
No, and it wouldn't matter anyhow, because he tends to change things.
Oh, when? I haven't seen that.
Haven't seen that one, Joe.
Yeah. Great. Steve, thank you. Thank you for the long interview. We appreciate it.
Thank you so very much.